ever have one of those weeks where, you're really stretching every dollar, trying to make ends meet, maybe put them off a couple bills?
Yeah.
Now imagine someone told you there's this huge, massive pool of money out there, hundreds of billions of dollars that should be going towards, I don't know,
Yeah.
better schools, roads, healthcare, you name it, stuff that benefits all of us.
Right.
But here's the thing, that money is, well, it's missing. And no, it's not some elaborate heist, although it might as well be. We're talking about the IRS tax gap. So today, we're doing a deep dive into a brand new IRS report all about this very issue, the 2022 tax gap. We're going to break down exactly what it is, how big this missing money pile really is, and what's being done to, to recover it.
Right.
And to help us unpack all of this, we've got a leading expert in tax policy and analysis with us. Welcome to the show.
Glad to be here.
Okay, so let's start with that headline figure from the report. They're saying the tax gap in 2022 is estimated to be, get this, a staggering $729 billion. That's billion with a B. Honestly, it's hard to even wrap your head around a number that big. Yeah, it's definitely attention-grabbing. That $729 billion is what they call the gross tax gap. Mm-hmm. Basically, it's just the difference between what's owed in taxes and what actually gets paid on time. But the IRS doesn't just give up on collecting that entire amount, right? They actually project that through their enforcement efforts and, late payments and all that. Right. They'll recover a portion of it. So it's kind of like a game of cat and mouse, but with hundreds of billions of dollars at stake.
In a way, yeah. And even after they take those anticipated collections into account, the net tax gap, the part they don't expect to get back, is still a massive $606 billion.
Okay, so even after the IRS does its thing, $606 billion is still going uncollected. I mean, that's more than the entire GDP of a lot of countries. Just imagine what we could do with that kind of money, invested back into our communities. It makes you wonder, are people just suddenly deciding not to pay their taxes? What's going on?
Yeah, that's a great question, and it's actually something the report actually addressed. It's interesting they found that the increase in the tax gap, it wasn't because of some sudden drop in taxpayer compliance, like everyone decided to not pay. It's more about the changing nature of how our economy works, how people are earning money these days.
What do you mean by that?
Well, think about it. We've got the rise of the gig economy, tons of online businesses popping up, more and more people investing. And these income streams, they often fall outside those traditional reporting methods, so it makes it a lot more complex to track, and tax accurately.
So it's not necessarily that people are deliberately trying to, cheat the system. Yeah. It's more like the system itself is having trouble keeping up with these new ways of making money.
Exactly. And that complexity, all that, it feeds into the three main components that make up the tax gap: non-filing, underreporting, and underpayment. And non-filing, that one's pretty straightforward, right? It's people who just don't file taxes at all. But underreporting, that's where things get a little more interesting.
Okay, so underreporting meaning people fudging the numbers a bit on their tax forms.
Essentially, yeah. It could be intentional, but a lot of times it's unintentional. Maybe there's a lack of clarity or understanding about the tax laws,
Right.
And the report really highlighted something fascinating here, this idea of income visibility. See, when the IRS has a clear line of sight on your income, like with wages that are reported through a W-2, that misreporting rate, it plummets to just 1%.
That makes sense.
Yeah.
Your employer is telling the IRS exactly how much they paid you, so you can't really hide that. But what about income that's not so easily tracked?
That's exactly where the gap starts to widen. Take, for example, non-farm proprietor income. Think freelancers, independent contractors, small business owners, that sort of thing.
Right.
The misreporting rate for this category, it jumps way up to 55%, according to the report. It just goes to show you there's a big connection between transparency and compliance.
So it sounds like a lot of this comes down to how easily the IRS can keep track of different types of income. But what about different types of taxes? Do some have higher compliance rates than others?
Yeah, absolutely. The report actually dives into compliance rates by tax type: individual income tax, corporate tax, and employment tax. And you're right, there are some interesting differences there.
Okay, well, walk us through those. What stood out to you?
Well, let's start with individual income tax. Compliance kind of hovers around 80%, which has stayed fairly steady, over time. And that's partly due to, the well-established reporting systems we have in place. Then you've got corporate tax, which is a bit higher, around 87%.
Makes sense. Bigger companies, more at stake, probably more scrutiny all around.
Exactly. Now, with employment tax, we see how powerful that withholding system really is.
Withholding, you mean taxes being taken directly out of our paychecks.
Yeah, exactly. And because of that automatic deduction, employment tax has a really impressive compliance rate, like 92%. It just really cuts down on the opportunity for underreporting or underpayment because it's already taken care of.
It's amazing how that built-in accountability makes such a difference. But I gotta ask, how does the IRS even begin to measure something as complex as the tax gap? It's not like they're counting pennies in a piggy bank, right?
Right, a lot of people wonder about that. It's a complicated process, to say the least. The IRS relies on a few main methods. One is sampling. So think of it like taking a slice of cake to get an idea of the whole thing.
Okay.
They analyze a smaller portion of tax returns to try and get a sense of what's going on with everyone.
So they're looking at this smaller group to kind of extrapolate what's going on across the board.
Exactly. Another method is called detection-controlled estimation, which really focuses on those cases of non-compliance that they've already uncovered through audits and other enforcement actions.
So they're looking at a sample of, like, average taxpayers, and then also zeroing in on the cases where there are some red flags.
That's the idea. And on top of that, they use statistical adjustments to account for things they can't directly observe. It's like filling in the missing pieces of a puzzle using the pieces they do have.
Right.
By using these methods together, they get a more complete picture of the tax gap.
But even with all that, it still feels like trying to grab onto smoke. And the report even talked about how the IRS is facing all these new challenges, especially with things like digital assets.
Yeah, for sure. The financial landscape's always changing, right? So the ways we measure and try to deal with the tax gap need to change too.
You mentioned earlier that the IRS does expect to recover some of this money. Are there any new tools or strategies they're using to do that? I think I remember something about a big funding boost for the IRS.
Right. You're talking about the funding from the Inflation Reduction Act. That was a pretty big deal.
So what's the hope with that? Will that extra money actually make a dent in the tax gap?
It's still early to say for sure how big of an impact it will have, but the idea is to give them more support for their enforcement, help them improve their technology and data analysis tools, and provide more support for taxpayers so they're more likely to comply voluntarily.
Okay, so it's kind of a multi-pronged approach. More resources to catch those who are intentionally trying to cheat the system, but also more support for those who might just be making honest mistakes.
Exactly. It's about making the system more fair and more efficient as a whole.
That's $606 billion question still out there, though. Can we really close this gap entirely, or is it just a fact of life, something we have to accept?
That's the question, isn't it? There's no easy answer. But the important thing to remember is that this isn't just some abstract concept, you know?
It's true. It's easy to get lost in all the billions, all the statistics, but at the end of the day, this is about real-world impact,
Yeah.
How it affects people.
Exactly. Every dollar that ends up in that tax gap, that's a dollar that's not going towards essential public services. Things like schools, healthcare, infrastructure, those are the things that really affect our day-to-day lives, our communities, our future.
Yeah, it really puts things in perspective. It's
Yeah.
like we're all collectively kind of leaving money on the table, and that money could be used to really make a difference.
Right. And that's why this whole report and even this conversation we're having, it's important. It's not just about complaining about a problem. It's about actually understanding it, getting into the details so we can at least start to think about potential solutions.
Yeah. And one thing that's been really clear throughout all of this is just how crucial income visibility is. The easier it is to track income, the less likely it is to slip through the cracks.
Yeah.
Makes sense.
Absolutely. And it makes you think, right? Looking ahead, how do we make sure that income visibility keeps up with the way our economy is changing? I mean, think about how fast digital assets are growing.
Right.
That's a whole other world when it comes to tracking and taxing those transactions. It's tricky.
It's like trying to fit a square peg in a round hole almost. Our tax system, it's complicated, but it was designed for a different time, before all this digital stuff.
Exactly. So as we move forward and these new technologies pop up and new financial things, it's going to be so key to figure out how to maintain that income visibility, maybe even enhance it if we really want to tackle this tax gap.
It's a huge challenge, there's no doubt about it. But it's also an opportunity, right? Like an opportunity to build a tax system that's actually equitable and effective and actually
Yeah.
reflects how our economy works today.
I totally agree. It's about leveling the playing field, making sure that everybody's contributing their fair share so we can all benefit, so we can invest in a better future, you know?
Well said. We've gone over a lot today. The size of this tax gap, what's causing it, how it actually plays out in the real world for everyday people. It's a lot.
It's definitely complex, no easy answers. But hopefully, by shining a light on all the little intricacies of this tax gap, we can start to change the conversation a little bit, move it from just talking about the problem to actually exploring potential solutions.
Absolutely. And for everyone listening, we hope you've come away with a better understanding of this issue. It's not always in the headlines, but it's important because at the end of the day, this isn't just about numbers on a page. It's about making sure we've got the resources to support the things that matter most to all of us.